Welcome back to the Daily News with Steve Gaito. He is a certified financial planner. He is also the owner-founder of Retirement Resource Management. Got a lot to talk about today, Steve. Welcome. We're going to start with inflation. Just dive right in. Where are we? Is it getting a little better or are we getting worse?
Well, it honestly is staying about flat, which is different from what the media is reporting. Inflation is, they've got all kinds of metrics to do it in whether we're in a recession or not. Technically we are, whether it impacts people, but the reality is you're going to the grocery store, you know things are costing more.
Yes.
Gas has come down, which is going to be helpful, but we're getting ready to go into winter time and that sees fuel prices go up. So I think inflation's going to still be a challenge for the next couple years.
So are we in a recession?
Technically we are, at least according to my economics book back in college, but that was a long time ago, so they may have changed the definitions between now and then.
Well then let's look at the market. So what's going on with the market?
The market is one of those challenges because I just heard on the news that there's over 700 of the large corporations are getting ready to lay people off.
Really?
And so that may help stock prices, but it's not going to help our economy. And so we're always going to see challenges. My fear is that we go into a stagnant type market like we had in the 70s, where we see almost a flat growth. That is just catastrophic for retirees. And you've got to figure out how you get the income, how you generate more things. Interest rates are perking up. That makes it a little easier for retirees. But the market is general. I think we're going to see a lot of volatility.
Over the next year, 2 years, or?
Well, everything is short cycles now. When we used to do plans and forecasts, we were looking at 5 years, then it went to 3 years, then it went 2 years. Now, what is it doing next week? That's kind of how it is. And if you're looking at the market and you're worried about it that much, you probably shouldn't be in it.
Okay, that's interesting. Yeah. Well, what about annuities and Roth IRAs? Let's talk about those.
So annuities have become a real attractive one. I just had a piece, it'll be going up on my website soon. It's 25 of some of the most influential people that are in the retirement planning business, and they're talking about the pros of annuities because there's a lot of negative information that's out there, but the reality is an annuity is there to provide income like a pension. And people need that security that's in there. So having conversations about it with interest rates going up, it makes them much more attractive. So we want to do that. And while the market is down, it is a great time to look at Roth conversions, as long as you can pay the taxes from another source. But doing the Roth conversion now basically means when the market recovers and it starts to gain again, you're going to get the appreciation in price in something that's tax-free. And so that's going to be a big benefit for people. And, it's a relatively easy thing to do now with the companies that are out there.
And then finally, the Secure 2.0, what is that?
Yeah, so it's before Congress right now, the House and the Senate. It's passed both chambers, but now they've got to kind of wrangle and figure out what actually makes it into the final bill. But it's got some attractive things. There's a auto enrollment for retirement plans, which is going to help with the savings problem that we have for retirement. It's got a saver's credit for low and mid-income families, so that's going to help those that are really most at risk for not saving enough for retirement. Catch up in the IRA and the 401k limits. So those of us that have had kids go to college and have had the house mortgage payments, sometimes contributions to your 401k suffers until you've got them all out of the house. They're looking at student loans that they're going to make matching contributions to your 401k for what you pay in the student loans, which will be real helpful. Annuities, I mentioned annuities earlier. If annuities are so bad, why are 401k plans just dying to have them in there? Well, it's because they realize they don't have a pension plan and they want to have some guaranteed income. So that and QLACs, which are qualified annuities that are lifetime income annuities, that will be available in there. And there's some stuff that's there to help small businesses, help small nonprofits, which is an area that really suffers. And then finally, to minimize paperwork. Amen.
Yay. Well, so would you say that this is a positive piece of legislation, or?
Well, it's bipartisan, which doesn't happen very often. I think there's only a couple senators or representatives that voted against it, but really, they're trying hard to get, make saving for retirement more affordable.
Right, very good. Stephen Gaito, who is with Retirement Resource Management, and your website is retirerm.com.
Yes, that's it.
For more information and lots of resources for you as you prepare and plan for your imminent retirement, which you told me how old you are. It's far away.
Yeah,
but
I
you're
wish.
still planning.
I am.
Big time. All right, thank you, Stephen.
Thank you.
Appreciate it. And we'll be right back.